Dhirendra Tiwari is the head of research at Antique Stock Broking and now joins in to share his view. Dhirendra, good to have you on board. Thanks so much for joining in. Give us a sense as to how you're looking at the overall outlook when it comes to the growth quality theme. You believe that the year gone by has been a year of two halves. Elaborate a little bit more about that and what you're advising people to do when there are near-term corrections.
Certainly. So, as you know, the year has been quite dramatic year. We had extreme pessimism to strong optimism towards the end of financial year FY21. I have seen very few years like this, and therefore it's difficult to predict the future. But having said that, if you look at last 12 months, the market has gone up by almost 95%, and there has been a whole lot of stocks which have outperformed even this kind of return by the market. So if you look at last 12 months, generally first half was driven by a lot of fear, which led to investors moving towards IT, pharma themes, which also benefited because of the lockdown and because of the COVID situation. So, April to September, the significant move of the market was led by IT and pharma. And, once we started seeing that there is lifting of lockdown from September, October onwards, then we see a significant re-rating of the recovery stocks. And then, of course, stimulus driven by government incentives, PLI schemes, etc., drove the sentiments towards a long-term recovery. So that is where we are today. The market is at a very elevated levels as far as the multiples are concerned. And therefore, from here on to really look into future is quite challenging. But having said what we are seeing today is that given the situation, we are looking for a very significant structural recovery over next 3-4 years, which is going to drive the market. In the near term, given the situation panning out in terms of re-lockdowns and infection rates going, it reminds a situation which was there in March, April last year. And therefore, in the near term, probably next 3-4 months, again, the move will be towards IT and pharma. Those are the sectors that could start doing better in the near term.
Okay, let's elaborate a little bit more on those key overweight sectors. Walk us through the outlook on metals as well as consumer discretionary and what the thesis is for betting on these spaces in the long term.
See, our view is that overall next 4 years, 3 years, 4 years, the cyclical recovery or the economic growth will be quite profound. The reason for that is very simple. We have not seen the kind of stimulus globally or in India in recent history. That is one. Secondly, interest rates remain pretty low and they will remain reasonably low in the due course of time. Thirdly, various incentives that the government has given in terms of low corporate tax rates and schemes like PLI, strong push on the infrastructure investment. These are the things which will revive the economy at a faster pace in next 3-4 years. This, indicates strong outlook for sectors like metal, cement, and also, sectors which are dependent on investment themes like capital goods. So our view is that, these are the sectors that will continue to do well. We are of the view that the world is certainly into some kind of super cycle as far as commodities are concerned. And therefore, while the recent, rally, which has been quite strong, may keep the upside limited in the near term. But I think over the next couple of years, this is the space one should look at. The other space, which is consumer durables, remains quite attractive because India is moving towards aspirational levels across broad categories, and that remains also good sector to look at in the next 2-3 years.
Okay. Why do you believe the pharma sector is a good tactical bet? Because there has been, some sort of an underperformance as well that we've seen of late. And where exactly within pharma, or what's the kind of category of companies that you'd be betting on within this space?
See, pharma sector, as you rightly said, has been an underperformer in last few months, especially after September, October, once the lockdowns started opening up. So that is one thing. Having said that, the long-term outlook for the pharma sector remains quite interesting. It is not a sector which is significantly impacted because of the slowdown in the country overall. So our view is that whatever froth, whatever overvaluation was there in the sector has been taken away because of recent underperformance. Growth outlook remains positive. And therefore, I think, tactically speaking, in next couple of quarters, the sector can again start performing in line with the market or slightly outperforming the broad market, given that there is some bit of risk as far as the growth and stock performance in the sectors which have done very well since September. So that's the key thesis. And within pharma, you have to be very selective, given the fact that each company has its own story, it has its own risk. And therefore, pharma is one sector where we like to go strictly stock by stock. So there may be a few stocks which are good within the export theme, and there are a few which are purely domestic plays, which are likely to do very well. So it depends on which company you are looking at, frankly.
All right. Thank you so much for sharing with us your outlook, Dhirendra. Good to have you on board. Let's take a very quick break. Come right back. Lots more on when we return.